Hello and welcome, everybody. This is the Hot Corner Insider live strategy session. I am your host. As always, I'm Steve Straz, the Director of Research at All Star Charts. We do this every Wednesday at 1 o'clock Eastern Time. We do a little bit of macro, a little bit of top down, talk about the developments, the recent developments from a technical standpoint. We will cover or reiterate some old trade ideas. And then we almost always have some new ones. We got 3 new ones today, which we will save till the end of this call. Hello, everybody in the chat. Quiet chat today. Get through this disclaimer and we'll get going. Nothing we discuss here today constitutes any solicitation to buy or sell any security. This is all solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, stockmarkettv.com/terms. What did we do here? Well, it's pretty much exactly what it says. This is the prior cycle highs checklist. What are prior cycle highs? Shown here with the red arrow. This is the late 2021, or in some cases, I think in the case of the S&P 500, it was the early 2022 high. Markets then peaked, rolled over, entering a bear market period, which really didn't end until, well, it depends on who you are. Some would say it ended in the summer of 22, when most stocks bottomed. Some would say the fall, when most indexes bottomed. And here's the NASDAQ. Well, this is NASDAQ equal weight. But in the case of the NASDAQ cap weight, really didn't bottom until December. Then we entered a nice new bull market. And what happened was all of these indexes, sectors, industry groups, individual stocks, the list could be a lot longer than what we have. But these groups ran back to their old highs. In many cases, took them out and continued higher. But in too many cases, took them out and then failed, like something here in the equal weight NASDAQ, and are now back in this box, or back in this old range, back below overhead supply, back below this major resistance level. I think it's prudent to have a more cautionary stance in an environment where too many of these indexes, assets, are below their prior cycle highs. So we listed out almost 20 of our favorite. By favorite, I mean most important and closest, right? We tried to see everything here is less than 3.5% away from the prior cycle highs. Okay, so let's just, real quick, what stands out? A couple are above. There's a big skew outside the US for the ones that are above. So Spider Euro stocks, that's FEZ. This is the Stocks 50 index. MSCI India, this is the Nifty 500. This was included as a barometer for emerging markets, right? India, the second largest weighting in emerging markets now. Massive weight. So India above. Russell 1000 value, so large cap value above. Mega cap growth, which we included instead of something like large cap growth. It's the same thing. It was just closer to the prior cycle high, still above, right? So don't throw your tech stocks out yet, right? Don't throw your growth stocks out yet. It's middle of a bull market. These are ones that are actually holding. Nicey Composite, that's a big one, above. Equal weight tech, again, don't throw your tech stocks out, please. But then too many below, right? More of them are below than above, so let's go through right now. Some of them that are below. Equal weight S&P 500, we need this damage repaired ASAP. Equal weight NASDAQ, same thing. Mid caps, so much stronger than small caps. By design. Your price has to be trending higher for your market cap to grow enough for you to move from small cap land to mid cap land, right? I don't care too much about this one. We included it. Large cap healthcare. Really clear level there. We're below it. Materials, same thing. What in the world are materials doing today? Let's take a little look. Doji, This is what you call an indecision candle. Sorry, I'm not showing it up on the screen. We might start doing live charting here a lot more. Working on something for that. XLB below the prior cycle highs. I would say for something like XLB, it's 92. 92. We're below there. Work to do. All country world index. This is like 60% US, but it's got a lot of Japan, a lot of developed Europe. So it's a good index. We were repairing the damage. We were pretty much there, but the last 2 days, not so good. Markets, a lot of markets, at least right now, trading on their lows of the day. I mean, energy looks awful. We're getting energy in just a second. Financials holding in better than most, getting a bit of a defensive tape here again today, with utilities actually booking pretty solid gains so far at the sector index level, while things like cyclicals, communications, really struggling. Actually, communications are looking good, but that's being driven by, I guess, the strength from some of these media companies today. That's interesting to see, though. Okay. Netflix down, and what's Google doing? Google's looking good. Indecision day. Anyway, ACWI, this is a really nice global benchmark. Euro Stocks 50. Good for Europe. We could have included things like Germany, United Kingdom, FTSE, right? But we wanted all US dollar denominated assets. We could have included like EWU. EWQ is France. But this one it includes all of those countries. So we figured we'd go with the diversified index. India looks great. I don't know how much of a read that is into the US equity market, but it's solid from an international standpoint. Vanguard mega cap growth, excuse the symbol, this is MGK, but holding those prior cycle highs. Nicey composite, looking pretty good. Retail, Amazon helping. Retail, above the prior cycle highs, it looks like for now. High beta, right there. So close. Financials, work to do. I continue to really like financials, but we got to get this breakout in the books here, right? Everything is easier when all of these charts are above their prior cycle highs. Making money on the long side is easier. XLE, 2 really bad days here for energy. Really bad. You know what else has had 2 really bad days? Well, Bitcoin. So Bitcoin's going to be on this list too. We're going to add it. In a world where this table is flipping green, Bitcoin's taken out its prior cycle highs. Bitcoin's trading into the 70s, right? This top will end up saying was a pretty sweet failed top if this happens anytime soon, right? What do I mean by that? Bitcoin's been, climbing higher, one top after another this whole cycle. So Q1 of 23, failed top, a little scoop lower, and then we go. In Q2 of last year, another failed top, we scoop lower, and we go into some sort of a base, have a nice run into the fall and into Q4, form another top to January, little failed break, and then we go. Is this one different? Is there any reason why this one might be any different from the others? Obviously, I don't know yet. We don't know yet, right? We need more data. Just the selling pressure of the last 2 days, though, certainly stands out, right? So what am I showing here in the lower pane? This is intraday, right? So let's see how we close. Bitcoin has a longer day than stocks, traditional markets, right? So when I'm going to sleep tonight, and it's whatever London Standard Time, midnight, I'll check my phone and we'll see if Bitcoin ended up here. And if it did, anywhere as near where it is right now, this will be the worst back-to-back performance, worst 2-day performance, right? Back-to-back down days since the lows, October 2022, this was FTX. It's a little waterfall lower, right? That would be the worst 2-day period up until right now, today. So, will this top fail and look different from the last three? I don't know. We'll see. But it would have to fail like pretty soon, right? Usually they fail like this, the one from Q1. It's less common for them to fail like this, where they kind of hang out, drip lower, and then go. This tends to be quick when you get this shake and go, right? You really want it quick. So I think maybe we have our answer by the end of this week. Okay, so what does that mean for crypto stocks? We got a couple on our list. Mara, I was going to do a little report on the Bitcoin miners just last week, but these things sold off real good. They had a nice ramp higher, and then the air really came out fast. So I think most of them are still opportunity cost. Mara is no different as long as below 19. But look, these stocks, when they go, they go. It's not uncommon for them to move 20% in a day, or at least more than 10%. Mara on strength back above 19. I think we could own it all day, and I think we do eventually go a lot higher. But down here, below 19, very messy. Maybe this little top completes. Starts to look more like Bitcoin looks right now, right? We'll see. MicroStrategy. This is the level, right? If you drop a VWAP, this is the October low, coming right in, right around 1,000. That's my stop. I got involved in MicroStrategy just a few days ago, or maybe it was late last week. You got to give these volatile assets room to dance. I gave mine almost 30% to the downside. I'm sorry, almost 20% to the downside, back to 1,000. So we'll see. We will see, but I could be getting stopped out of this here today. Again, if you're not in it already, I think strength above and through 1,300 is really the move. If I were to drop a VWAP from the recent highs, it would come in right around 1490. I think you could use that for confirmation. Okay, it's earnings season. Who loves earnings season? I do. We're working on something new internally. We're doing, I think we're going to call it the beat report. We're just going to make a universe of stocks that are consistently beating earnings, gapping higher on earnings, or at least just a positive reaction to earnings. And then we're going to overlay our technical filters and just outline, bullish trade ideas in stocks that have strong, very strong, at least short-term fundamentals, right? If the market's reacting positively to your earnings report, probably have solid fundamentals. That's how we're measuring it. Amazon just beat. I thought the AWS revenue was really impressive, 17% year over year growth. That's, I think, a couple hundred basis points higher, like 3% higher from what they did last quarter. I think it was about 14%. Right. So that's really their core business these days. Everything seems to be good for this company. What I like about it, at least, from a technical standpoint, is that it's a buy on strength only setup here. So 188, I guess, pretty clean level, 2 touches, prior cycle. This is the same chart as all these prior cycle highs charts, right? Financials, mega cap growth, same kind of situation where we're just talking about these prior cycle highs. Amazon's a huge component in the retail ETF, right? So 188, I guess 189, buy on strength, along with the target of 255. AMD also reported earnings yesterday. Down 9% here today. Not so good. You really only want it above 165, right? This could be a really nice scoop. It's set up, but we got to see it. It's moving in the wrong direction right now, trading all the way down to 144, taking out the pivot lows, testing the 200-day almost, at least testing the 200-day on an exponential basis. This is simple. Oops, sorry. Oh, shit. Sorry, Gene. AMD, long, only above 165. Don't touch it beneath there. Okay, let's talk about Apple. So this is the big report this week. All eyes on Apple. Do you want to make the bet that really the biggest, baddest company in the world very much part of this new secular bull market thesis, right? This AI super cycle. Apple, one of the largest tech companies in the world, largest by earnings, bigger than Microsoft, by the way. Biggest, baddest company in the world is going to complete a double top in the middle of a bull market. Again, Apple is going to complete a double top, massive distribution pattern in the middle of a bull market. It could, sure, maybe. Boy, would that be strange. Even companies that aren't doing the best from a fundamental standpoint, Apple's not doing poorly, right? Even companies that aren't doing the best tend to catch bull market tailwinds during good times and trend higher. Maybe they trend higher at a slower rate, right? So we could call them laggards, right? But they're still trending higher on an absolute basis during bull markets. Apple hasn't been since last fall, really since last summer. Stuck in this range. I do not think Apple breaks down here. I think this is a nice little bear trap. I think Apple's going to work its way higher. I don't think this quarter's earnings report is going to be great. I don't think people are going to like it, but I think the stock probably reacts higher anyway because we're already down 15% from the highs just late last year. So maybe a bad, Q1 is already baked into the cake, and the street or the market is smart enough to look through a 1 week quarter to maybe a new AI phone upgrade cycle that probably starts in Q4 of this year. Again, ask yourself, do I want to bet that Apple's going to complete a giant distribution pattern in the context of a bull market, while stocks like Google and Amazon and Meta are trading near highs? It's not the bet we want to make, folks. Do you want to make the bet that Apple, one of the most innovative companies in the world ever, is not going to participate or is going to miss, right? They missed it. They missed AI. They blew it. You think Apple's going to blow AI? Here's the thing about, AI. This race won't be won today or tomorrow or next week or even next year, right? These companies are playing for the long run. I'm not going to know who the winners are, but to think that any of these mega cap growth companies, any of these tech giants aren't going to benefit in a very significant, very material way and leverage AI and use AI and probably sell AI or at least, innovate with new AI tools, they're going to be making money off this. Google already is. And just a few months ago, do you remember? Google missed AI. They blew it. I don't know. I don't think Apple misses it. I think that kind of narrative and that kind of talking down the stock, creates opportunities for us. So if we're above this, I don't know, 165-ish level, I think you're long Apple. I like it. I like it a lot. You could trade this range back towards 200. And then some. Just own it. Dita, DVA. Getting a nice breakout here. 136 is that level. Long Dita. CEO was buying just late last summer. Target at 180. It's not a new setup. These are the ones that I'm really into right now. And look, they're not all working. But if you're buying ASML at 710 with a stop at 708, you're really not hurt at all, right? Just keep that stop so tight. We only want to be in it above the prior cycle highs. The closer you can buy it to those prior cycle highs or wherever you want to, set your resistance level, closer you could buy it to that level, the tighter you could set your stop and the more you can limit your risk. So I don't see any harm in taking shots at stocks like ServiceNow, retesting. Uber looks the same way. So ServiceNow, 708, 709, price target 939. Here's Uber, 64. I'll be buying. 64 in Uber's prior cycle highs. This was CO Dara, 5 million. Uber above 64, we love it, 91. Tenet Healthcare. Look, they're not all failing at their prior cycle highs, right? Some of them that we're buying at these logical support zones are ending up looking like this. Google, I know it's given some back, right? Tenet Healthcare, vice president, executive vice president, CFO. Blue Owl Capital. These asset managers, these capital markets companies, a lot is working in financials. We're above 17, 18, called 18. Target 24 in the owl. I thought WMS was Williams Sonoma. Oh, that's WSM. Yeah. Advanced Drainage Systems, WMS. These waste companies, pocket of strength, for sure. So Advanced Drainage, WMS, long above 153, target 200. 3 new setups. Oh, no, 2 new ones after this. Virtu, we did talk about last week. I just like it more and more. Even JC likes it. They'll tell you this one has an inverse correlation to the broader market. I don't know how true that is. They do better from an earnings standpoint, far better. We talked about this last week during periods of volatility, typically market sell-offs, bear markets, corrections, right? We talked about this last week. So again, above 21, dropping the VWAP from the prior cycle highs. This reversal is in. First stop 25, second stop 30. And why not 38 over time? Back to those old highs. I like Virtu. Also, that capital markets theme, right? They're liquidity provider, high frequency trader, market maker. LPL Financial. Sticking on that capital markets, broker dealers and exchanges theme. LPLA. Looks like it's going 272. Let me see what it's doing today. Giving some back today. Yeah, I really only wanted above 272. We're trading at 265. One more. Impinge, PI. Got an institution in this one. This is a recent Form 13 filing. Oh, it was actually a Form 4. So $3 million. Celebra Capital. This is PI. Big breakout in a tough tape. Love to see it. That relative strength definitely stands out right now. So 145. Yeah, long all day above 145. We're trading at about 154, 155 here today. That risk reward still works though, right? With the stop 10 points lower. Yeah, because you got 50 points to the upside from here. So it still gives you about a 5-to-1 risk reward. So I like PI. I think you could buy it right here on this little bit of weakness here today, down 3%. That's really it, guys. Let me just check the chat, see if anybody's talking to me. No, deep breaths, diaphragm breathing. Yeah, that's all good stuff. Communications. See, Frey, I don't look at the sector spiders when I talk about what sectors are up or down. I'm looking at equal weight indexes that are based on Russell 3000 constituents. All right, guys. That will do it for today. We will be back same time, same place next Wednesday with our next Hot Corner Insider live strategy session. Until then, join us on the morning show every morning, 8:30 to 10 o'clock right here on Stock Market TV. And if you have any questions, comments, concerns, want to say hi, shoot us a note, info@allstarcharts.com. But again, that checklist, it's got to improve before we want to add exposure and add more risk to our portfolios. We will continue to cover the checklist in the coming weeks to keep you updated on that. But for now, patience continues to pay. All right. Thanks everybody for joining today.